Welcome to a special edition of The Mortgage Voice with Jeff Barton. Jeff's guest is Nina Penny as we do a deep dive into reverse mortgages in this three-part series. And now, here's your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, and I'm your voice to the mortgage industry. Thanks very much for tuning in. This is a special show with special people, and I'm really grateful once again to talk about this particular subject because in a time where money is needed and it's not quite sure where we're going to get it, a lot of older people, it's important to understand that you've got money, and where, of course, is in your house. I just read a statistic, and I'll pull it up again. That older Americans, and this just came out, Q2 was a great quarter for older Americans. 80% of older Americans, that would be 65 years and older, 80% own their own home. That's an astounding statistic. And what's more is over half of those people own their home outright. So in order to take advantage of things that are right in front of you, as opposed to panicking about what's going to happen, the security with which you've placed in your home and that you have in your home equals trillions of dollars of equity. And how do you solve an issue of either short-term liquidity or in a way by which you can help others? With us today, and I really am happy to bring Nina back. Nina's been on the show many times, but again, to talk about one of the best solutions that you can have. Nina Penny here to talk about some of the reverse mortgage solutions that we can offer to everyone, and she's here to talk about that. Nina, how are you?
I'm great, Jeff. Thanks for having me.
Thanks very much for coming on the show once again. And in this initial segment, I wanted to give everyone an idea of who you were, who you are, what you do for people, and some of the qualifications that you bring to this particular subject.
I appreciate that. I think it would be great when we talked earlier about, giving some history about reverse mortgages. Because there's a lot of misconceptions out there, and, we've been trying to educate people about what this product actually is and why people think, why people have all these misconceptions about them. So first of all, before we go into that, I am a loan officer. I am also a certified reverse mortgage professional. That is a credential that's given by NRMLA, which is the Association for Reverse Mortgage People. And the industry puts together a platform that people who practice this loan and who work it can get certified. There's only 152 people right now who are certified within the United States. So we are pretty high credentialed. It's not an easy certification to get. I'm sure if it was, a lot more people would have it. So with that being said, I got my certification primarily because I love the product. And just like anybody else, if I wanted my taxes done, I went to a CPA. And I thought if somebody wanted a reverse mortgage done, they should come to a certified reverse mortgage professional. And so that's why getting that credential was pretty important to me. I'd like to talk about the misconceptions. So the first reverse mortgage was done in the early 1960s. It was by a lady that lost her husband. The only asset she really had was her home and no cash. And so the bank created a loan for her. They went on title with her, and it became shared equity. So now the woman owned the home with the bank. And when she passed, either the loan would be sold and the bank would be paid back. And sometimes if there was a profit, the bank shared it with the heirs. Now, if the bank, if the loan was actually sold and she owed more than the value of the home, then they went to the heirs and said, you know what, your mom owed us this much money, okay? Because they were on title, they were equal owners. And so a lot of these connotations really led for a very, very hostile environment when it came down to this product. A lot of people did not like it. When Ronald Reagan was in office in the 1980s, he actually sent this program to HUD and said, you know what, it could be something really great. Why don't work on it? Make it something better. And so what happened was that HUD made it basically into an FHA loan, which the benefit is that you're not obligated to make payments. You can if you want, but now they put on this mortgage insurance, which protected the bank so that, you know what, if you ended up owing more than the home was worth when you passed or you sold it, they no longer went after the heirs. And now it's just a loan. It is just an FHA loan that you are not obligated to make payments on. You can if you want, but you're not obligated to do so. And people are still thinking about this product from way back when. And we struggle to educate people regarding these changes that have now been, around for 20 some odd years.
Right.
And we're still struggling. And if we could educate everyone on what this product is, it would be so helpful. But, hopefully the more we talk about it, the more people will realize that this is not that same product. And this product has features that are so helpful and so beneficial. So that's a little background. So just where reverse mortgage is not, it is not shared equity with the kids or the parents that own the home. If you end up being upside down, there's no recourse. It's a non-recoursive loan. The bank gets paid by the mortgage insurance premium. And some people say, well, the loan's very expensive. But we've probably all had government loans. I know I have an FHA loan on my house. Now, with that comes mortgage insurance. We have an upfront mortgage insurance, right? Mm-hmm. I have it. Everyone that has an FHA loan does. And the upfront is 1.75. A VA loan, if you used it more than once, your VA funding fee is 3.6% now. Now, reverse mortgage is 2%. Mm-hmm. So it's kind of in line with the other government mortgage insurance premiums or funding fees, the upfront fees. But like I said, we're always struggling to educate people about the government-backed loans.
Nina, a couple of questions, and thank you for that. I appreciate, telling people. I think what happens is over time, I'm in my 60s, 65, let's say. Older Americans have it in their head about something that happened. Yeah. And it's very difficult to re-educate or change someone's mind, unless, of course, you have the ability and the credentials by which, and the patience, obviously, to sit down with customers on a one-on-one basis. This program is designed to try to help people who are not necessarily educated about it, and also to be able to get you in front of people without having to sit one-on-one with them. So I have a few questions I wanted to ask you. If you don't mind, you got a second here. Let me pull it up. Oh, okay. There are a lot of ways to benefit from the reverse mortgage, right? As we've talked about. A couple of the things that can be beneficial, obviously, are you can use it as a way by which you have a line of credit, mm-hmm. or you can use it as to take out a lump sum of money.
You're listening to a special edition of The Mortgage Voice with Jeff Barton. Jeff's guest is Nina Penny talking about reverse mortgages. Please proceed to segment number 2.